So most people come into investing thinking they're just gonna double their money or just have fast results, and they just think that they're just gonna like catch the next big like stock before anybody else. But that's so far from the truth. Like if you really want to have success in investing, there are a few tips where I'm going to share in this video that will help you become a better investor. Very first thing, if you haven't watched any of my videos, I would like to present myself. I go by Ali Mavis, and I've been recording my journey ever since November 13th of 2025. And no, November 13th, 2025 isn't the first day I started investing in stocks. I've been investing in stocks for more than 10 years now. So, November 13th is the journey that I've taken to show you guys what it looks like to invest with a small account. Investing slow in the beginning and keeping the longevity and consistency along the way. Now, people when they first start this journey, what people focus on more is making money versus the habit. And what people need to care about is consistency, the discipline, and deposits. A lot of time we're so focused on our profits, account size, and big wins, right? We don't focus on like consistency, deposits, and the discipline. Also, another thing too, throughout my journey of investing, I realized that people look at red days differently. People look at red days like they lost all their money. But we all know we don't make or lose money until we sell. So when the market is red, we look at that in such a negative manner, and it shouldn't be looked at as a negative manner. It should be looked at as a positive manner because red days just mean discount days, right? Like if gasoline was $2 and tomorrow dropped to $1, is that bad for you as the consumer? No, that's phenomenal. You'd buy more gas, right? So that's another trick. That's another like thought process when you're investing is don't look at red days as like you're down, you're losing. You don't lose money until you sell. You don't make money until you sell. Next thing, guys, what people like to do is like they like to compare their portfolio size to other people's portfolio size, right? And I a type of person where I just look at percentages. I like to look at percentages because percentages tells the whole story. Because if someone who has $100,000 in the account that makes 10%, it's gonna be 10 grand. Even if they make 1%, that's $1,000. Versus someone who has $100 and you make 1%, it's only $1. So and you if you start with 100 and you make 100%, you only make two. You only made $100. So like your account size also put into consideration, but not necessarily like the account size, but like put that into consideration. Like if you only have a little bit of money, okay, cool. The next thing to look at is percentages. If you have a little bit of money and your account grew, let's just say here in 3 months, my account grew 10%, almost 11%. Well, you have to look at, okay, cool. Where can I find this 11% elsewhere? And if I have more money, obviously more of a return. But for now, the money that I do have, I'm yielding a nice return. Another thing that people do is they buy random. They buy random. People would go on Reddit or they'll listen to the next person and just buy stocks without doing their own research or anything. And then they like to just chase the trend. So let's just say a stock is up or a stock is just on fire. Everyone would like to jump the trend, and I'm not just. Hey, listen, I've done that too, and I still sometimes catch myself doing that. You know, but I've learned that hey, if I'm gonna jump into something at a high price, I understand how to protect myself within investing. And if you guys want to learn how to do that, there's videos. I've have videos on here how I've been protecting my portfolio even on down days. right? So nonetheless, these are a few tips and tricks that help me that will help you become a better investor. Because a lot of times we think a better investor is just black and white, or our profits and losses, but there are habits and there are things that we need to do that translate into becoming a better investor. So, nonetheless, guys, you know what time it is. It's time to buy some stocks. The market is up today. We are green today. Whatever's going on with the war, I guess the market is liking it. Um, but that is not to say that there is still not buying opportunities. Still can buy here with SPY. $5 worth with the SPY. Just brought it down a couple pennies, 24 cents. We can get some lows. Lows is down. Just got down. Probably could add just $1. Just chill out. Just chill out. So what I'm doing, guys, right now is I'm doing average costing my shares. So what does average cost mean? It's basically just doing a little bit of math problem, right? So let's say you buy one product for 10 and you buy that same product for $5. Your average cost of both products would be $7.50. How did I do that? First product cost $10. That same product cost you $5. So you do 10 plus 5 divided by 2, and there you go. That's your cost average. So my cost average, we buy my cost average tells me how much to buy, when to buy, and everything. For example, my cost average has been in the 400s. So right now, Microsoft is below my cost average. So I'm definitely gonna be buying. Like, let's look at yesterday. Yesterday I bought it for 363. Day before 360. Where are we at now? 369. It's still lower. I'm still gonna buy. Like, duh. Like, I'm not gonna not buy because this is lower than my average cost. And my average cost meaning that I bought a lot of Microsoft in those 400s. So now I got to buy a little bit more in the 300s to balance me out. So what I like to do here is I like to buy 10% of my market value. So my market value is $62 and I'm down. So I'm going to buy 10% of the market value. So when this market value goes up, my cost of buying goes up as well. So look at that. It dropped me down $1.95. $1.95 into Microsoft. And then what else? Google and silver and copper maybe. Probably get some copper, yeah. We're only 3 points away. We could still get into there because I really want to sell out of these mine companies, but selling out to get back into the metals, I might as well just stay in, right? I might as well stay in. We got gold. Let me add some gold. Even though we're not far off, I shouldn't even be adding gold, but I'm add it anyway because we're down. And if we get another bull run, I want to at least add a little juice to that. Some silver as well. And then I got some plays for you guys. If you guys watched my video from yesterday, today's play will make sense. So I got rid of my covered calls from Intel and I got back into some covered calls from Intel. Probably was the worst mistake ever because so yesterday I got into this covered call at $46. I didn't think Intel was gonna shoot up 8% today. Like $3, $4. I didn't think Intel was gonna go up that high. So I did a cover call at $46 and I got a $25 credit, meaning that if Intel is above $46, I gotta sell it at 46 and I made a $25 credit. Versus Yesterday, if I didn't do this, I wouldn't be under obligations to sell any of my shares. I'd be up on depreciation, and then I could be doing a covered call at a higher strike price. But I mean, hey, that is the chances that we take when we do covered calls. I could even roll it, see what happens, but I like to just see how things play out. I like to see how things play out. Actually I might just do that. I'm gonna roll it with you guys. I'm gonna roll it with you guys because this is gonna sell tomorrow. This is gonna sell tomorrow. Yeah. So I'm about to do something with you guys here live that I don't believe I did yet on any videos. So I'm gonna roll this and I'm gonna explain and just stick with me here because it's a bit of information that I need you to understand how this works. So first things first, how this works is called a covered call. A covered call means I am putting my 100 shares for sale at a certain strike price and at a certain expiration date. So for example, I have one contract here at the 46 and I have one contract here at the 40, meaning in 2 day or 1 day tomorrow, if the underlying stock is above my strike prices, I am forced to sell those shares. Perfect. I hope you guys understand that. Next, what happens? Let's say I still want to keep my shares. What I can do is roll the position, meaning I can roll it to a further future date. If you're going to do a move like this, you want to make sure, like right now, if I wanted to buy out, it would cost me $227. So you want to make sure if you're going to roll that the credit is more than the debt. So this credit is 310. What it'll cost me is two and change. So I would be receiving another $80, $90 in credit for holding on these shares. So even though the stock is up and it's above my strike price, if I roll this, I can receive another $90 of credit. Whether the stock stays above, I will make I will keep the credit. So it's like another way of like making money as the stock is still going up, but you're not making all the money. Like your gains is capped, but I still put myself in a position where I can keep my shares in a sense. I still hold on to them. And then when I roll the position, I roll the contract, I'm getting more credit, right? So if I do this right now, is what 224, 224. I roll the position, 224. We're at the 46, 224, 313. Let's do some math real quick. 313, 234 was or 224, I believe. So like $89. So if Intel is above $46 at the end of expiration, I make another $80 for keeping this. So in the grand scheme of things, I'm gonna do it just so you guys can see it right here. So another credit, I'm getting another $96 of credit, but I'm not gonna get filled at the 90. So let's try 96. So let's try 89. Get us filled at 89. Oh wow, they didn't fill me. They didn't fill me, guys. Or did I get filled? Did I get filled? Or did I get filled? Habibi. Give me the order, Habibi. Roll the position. The 46. Man, you're trying to scam me, y'all. Give me 84. I can give me 84, right? Market makers are trying to scam me today. All right, so they gave it to me. So I rolled the position. I rolled the position. I got another $80 in credit, right? Another $80 in credit. I did this because tomorrow it looks like I'm most likely going to sell 100 shares of this Intel play. And now I still hold on to another 100 shares. So I still have this Intel play. So this Intel play right here says if Intel is below $46, I get to keep the $307 credit. But if Intel is above $46, I'm obligated to sell at 46, but I get to keep the $307 credit. But I rolled it over, so it's not entirely like $300. It's like in change. But all the credits here, all the money is there right here. We made our play for Intel. Tomorrow we just gotta wait it out, see how it pans out. And we have Hims and Hers, another covered call right here. Expires tomorrow. This was a $135 credit. I'm already $72 in. Honestly, I'm ready to sell out of Hims and Hers. Honestly, I'm ready to get out of this freaking stock. And then we got some credit spreads, and then we have SPY credit spreads. We're up on this. Probably gonna close this so I can just get my money back. Yeah, I'm gonna close this in front of you guys. Even if SPY rips, I don't care, because the name of the game is to protect my capital. And if I make $5, I make $5. Yep, or I make like $4 and change, whatever. So I made like $4 and change on that one, but I protected my money. It's like I made $4, but I invested 100, made 4%. I made 4% in like a couple days. So that's how I looked at them. I started looking at my trades as well too. I don't look at it like, oh my god, I only made $4. No, I invested 100. I made 4 to 5%, and it took me 3 to 5 days. Like that's how you gotta look at it, and that's how like I'm able to give myself on the pat on the back, tell myself I did a good job, versus like, oh, I only made $4, and then like you're discrediting your efforts. So never do that, guys. Never do that. Here, Hims and Hers, we got a couple plays. I don't know. I might roll tomorrow and see what it does and get some more credit, or I just might let this thing sell off and just get my money back and keep pushing. But if you guys have been watching me this whole entire journey, like I can close out of all these positions right now, sell everything as if is right now, and this would be more or less my market balance. Like this would be what I have in the account balance, more or less. I say that because if you watched my journey, look how much money I'm up, right? Look how much money I'm up this year. Just how much money I'm up just in the past month. This is what really matters. Past month, how much money I'm up. And I just deposited 5K. This journey started out with just $1. How can you invest in the market with just $1? And when I deposited 5K, I had like $200 and change in the account. So I had $200 deposited 5K, and now the account's at 557. So if you look here, I'm down $500 right here, but entirely because I've been protecting my portfolio. I've been protecting my positions. I've been doing things smart. I don't even say smart, but small and consistent. This stuff doesn't phase me. Like what the market just did a couple days ago didn't phase me because it was only so small, right? So I can weather these next couple bear runs or whatever, because yes, I have all the money. I have money here, but all the money is not necessarily invested into all these stocks. Like yes, it's technically is, but I got escape routes. And I'm wanting to get in and out of these stocks, in and out of these stocks, in and out of these stocks. I'm not trying to stay in these stocks for too long. So, ladies and gentlemen, I think this is the longest I probably went on for a video, but I think this is how it's gonna go, because that's just how learning goes, right? Like in the beginning, it's just little spoon, like you can take little spoon bites, but now you're taking bigger bites and your appetite's a little bit bigger. So, thank you guys for that. Today's Wednesday, tomorrow's Thursday. We got two. No, today's what? Today's what? Today's Thursday, or is there a holiday? Is there a holiday on Friday? I guess there's a holiday on Friday. So, oh yeah, Good Friday. Oh, Good Friday. Yes, sir. So, we have that holiday. That means we end the week tomorrow, ladies and gentlemen, Thursday. So tomorrow's the last day for the week, and we get to see how these things play out. I was confused for a second. I'm like, why does it say tomorrow and today's? But nonetheless, short week to this week, 4 days out of the week, and we get to see how it plays out. And yeah, ladies and gentlemen, if you aren't following me on social media, go ahead and follow me on TikTok and Instagram at Strictly Financial, and leave a comment down below. Let me know what some of the things you guys are doing, your guys' journey. Show me, show some pictures. I love to see it, guys. Thank you guys so much, and we talk next time.